Good afternoon, everyone. Welcome back. Hope you guys are doing well. Oh, let me turn my volume down. All right, guys, happy Sunday. Hope you guys are having a great weekend. Med, can you guys go ahead and confirm to me that you can see the dollar chart real quick, and audio's coming through clear before I get into this one? Picture fine. Thank you very much. Appreciate you, Adam. Thank you, Olawale and Jer. Thank you very much. All right, everyone. Hope you guys again are doing great. Wasn't sure if you guys could hear me before. Matt, happy Sunday, Dylan. Nasdaq still holding strong after dollar pump. Happy Sunday. Absolutely interesting to see. Looking for stronger dollar and stronger Nasdaq. Interesting times we're in. But we'll get into all that. Jesm, hello, Dylan. Hello, sir. Olawale, happy Sunday. Happy Sunday, brother. Glad to have you. Jared, good evening from Frankfurt, Germany. Shout out to Germany. Hear you well. Picture fine. Thank you very much, sir. Kays, yes, thank you, sir. Long time no see. Hope you're doing well. Aboard and abroad, DXY and 555 audio. Thank you very much. All right, guys, let's go ahead and get into this one. Without any further ado, dollar monthly chart. And well, before I get into the analysis, what we're going to be doing, I know we have quite a few new people here as well. So again, we're looking at the dollar because that's going to give us indication as to what the general sentiment is for the market with regard to risk on, risk off. Are investors seeking risk assets to put their money to work or risk off assets to put their money to work, right? And that is the relationship between the dollar and other assets, right? So with that in mind, dollar is going to set the tone for what other market prices are likely to do. So in understanding the dollar, you have a great advantage in your trading. In my opinion, you put yourself at extreme disadvantage in not knowing this information and not applying it to your analysis. And again, this is a integral part in my precision, in my entries, my exits, how I know where markets are going to go, where they're going to turn, and we're able to calculate that based off a well-rounded approach to intermarket analysis and top-down analysis. So with that, we'll get into what we're looking at going into this week. But of course, before we look forward, it's important to look back, understand where the market has come from, what it's done, as that's likely to reveal what it's going to do. Right. So that's what we're going to go ahead and go into now. And then as always, I'll take a few minutes for questions here at the end. It probably won't be on long after that. I have some other matters here to attend to on my Sunday evening. So after that, we'll go ahead and get going. Let's go ahead and get into the business, everyone. Monthly chart looking at dollar. Down close candle. That's a bullish order block. If we're bullish, we opened the monthly candle here for the month of June and we traded lower. So a lot of times I'll get asked, why don't I hold for one shot, one kill? Why am I not holding for big trades on non-farm payroll week? And the reason being is because you have to consider the time of the month that non-farm payroll week typically is, right? So in that first week, typically the higher low of the month is priced in. So what does that sound like? Well, if we're bullish, it's likely going to price in a low, and that's also going to create the Judas swing. So with what we know, time and price, we're not getting caught off guard with the Judas swing, right? Those equal lows we were looking for as a target last week that were delivered down into, those are what? Sell side targets to then turn higher. But there's narrative, there's logic behind all that that makes everything in the analysis fuse together. And we'll get into that in a moment. But again, just explaining the timing elements, right? So again, the low of the month likely priced in for dollar, but understanding time. So why am I conservative on non-farm payroll weeks? Why am I not trying to hit home runs? And it's because of this right here. Non-farm payroll week is typically highly manipulated. And in addition to, it's likely going to price in the higher low of the week, or excuse me, higher low of the month in this context. So looking at this going forward, if we're going to have a bullish expansion through June, which is what I am expecting based off the reaction we saw inside of this bullish order block. And the reason I have the opening price to the high is because whenever an order block has a large wick, I'm focused on the wick for the most sensitive areas to give us a reaction. So we opened, traded lower, hit the bullish order block, and then we saw a nice displacement to the upside. So this is the accumulation manipulation portion of the monthly candle. And I'm going to expect subsequent distribution to the buy side here and here going forward. So that sets the tone for my intermediate term analysis, what I'm looking for weeks to a month or two ahead. Long-term analysis, I'm suggesting we're likely going to want to reprice into this inefficiency. And then if we get through that, then we have the buy side all the way up here. Weekly chart. If you guys will recall, last week took your attention to the low here and the low here. Why? Because they're relatively equal, right? So if the market's bearish, which we were looking for it to expand lower, and you'll see from the open, where did the market move with the greatest magnitude of direction? Higher or lower? Lower, right? From where we open, much more range to the downside than on the upside. That's all you're trying to do with weekly and daily buys. You're not trying to predict where it's going to close, what it's going to do after targets are reached. Why? Because once targets are reached, you're paid. So open, expanding into all of our targets. Once that happens, it's non-farm payroll. I want to see what the market does, right? We tipped our hand to you guys that we were bullish dollar longer term based off several factors. One being fundamental analysis, but the other also being technical analysis. So what I want to go ahead and take your attention to here from the previous week is the newsletter that we make available every Sunday at 8 p.m. Right? So again, you can take a look at everything we offer there in terms of the economic calendar, earnings, COT. But I want to take your attention to something in particular here. I know a lot of you guys understand what we do on the technical side of things. You guys know we're very good technical analysts, but what else goes into that on the fundamental side of things? And I'm going to go and show you guys here. So looking at the commitment of traders, we're net bullish. Looking at the commercial hedging program, to teach all that would take me a long time. You can just ask those that are in my private community. They understand this very well, but it wasn't a 5-minute trainer. It takes understanding to piece this together and what's happening there. Only thing you need to know, commercials are net long. So that's indicating to us fundamentally that we should be bullish. But again, the price action is going to lead. So we were looking for lower prices for an expansion lower. But look at the context here that gives another layer of precision to what it is that we're doing in our trading. So here we're looking at, we're currently at equilibrium. Order flow will continue to be relied on until correlation between the technicals and commercials return. What does that mean? The technicals were indicating we're bearish, looking to reprice into sell side here and a discount. The fundamentals are bullish. So how do you use fundamental and technical analysis? I'm about to show you. If we drop down to the daily chart real quick, we'll see bearish order flow, and we were looking for these targets here and here. How were we able to expect it to deliver and then give us a reversal? How were we anticipating that? Well, if we go back over here, again, we're waiting for a correlation to return, so we'll continue to pay attention to the technical analysis and order flow with a gentle reminder that discount targets can constitute a reversal in line with commercial data. So what that's suggesting is that the fundamental analysis is bullish, but that's not enough to just buy, right? That's elementary trading like that. You can't just have the fundamentals supporting what you're doing. It's the fundamental analysis with the technical analysis that gives us superior insight into what the market's going to do and why it's going to do it. So well done there, Tommy. That is written by him. He specializes in that. So he is the specialist in the fundamental department. I understand enough to be dangerous, but he can articulate it much better than I can. So I'm saying all that to say, once we reprice into the discount here, I didn't call anything lower to you guys than the low here and the low here. Why is that? Because like I told you guys last week, and again, it's all there if you want to revisit all that, no hindsight. We were looking for the market to trade down to the sell side. But then I told you guys I want to see how we trade there, right? And then we see a nice displacement to the upside. So what I'm going to be looking for moving forward, again, I already shared this on the monthly chart, looking for monthly expansion, but again, refining it through the time frames. I'm going to look for expansion into these equal highs here labeled buy side liquidity. And then above that, we have these equal highs over here. So you guys should know my style by now. We were looking at these equal highs that they left here and these equal highs. I was not suspecting they were going to leave those intact long term. Were they selling it like bait, like it's really going to drop? In my opinion, that's what they were looking to do, right? Sucker people into thinking, well, the top's really in, right? Look at all this resistance, dropping lower. Or head and shoulders, right? Shoulder, head, shoulder, looking for lower prices. We don't trade patterns, and patterns only work within the appropriate context. So with that, I'm going to be looking for higher prices, looking for expansion on the weekly chart. But again, the key is the notable reaction of how we traded below the sell side. So if the fundamental analysis was suggesting the markets are bullish, well, now you have to factor in narrative. Interbank smart money traders, where are they buying markets? In discounts. So yes, the fundamentals bullish. However, we have to factor in the fundamental side of things, which is, okay, if smart money is buying, if interbank traders are buying, where do they buy the market? They buy sell stops. Where would sell stops be? Anyone that's long is going to have a sell stop here or a sell stop here. Smart money trades into those sell stops for the purpose of what? Accumulating, and that delivers all of our targets. And then we reject it to the upside, resuming the bullish trajectory that we've been favoring. But again, we have to trade what the market's giving us, not what we want to see. So again, notable reaction from the discount sell side liquidity. So I'm going to look for distribution to the upside, the buy side here, and the buy side there. Man, giving a price action clinic here today. Let's go ahead and mark this out. Daily chart. So now we're looking at the dealing range that we're trading in. So why these lows? Good question. Well, we have a dealing range from this low to this high. That's the range that we're trading in. That's the range that we're being dealt price. That's why it's a dealing range. What's significant about this low here and this low here? They're in a discount. They're below equilibrium of the range that we're trading in. So if the fundamentals are bullish and we're suggesting that we're likely to drop to see a reversal higher, and that's what our analysis is in line for, again, that doesn't mean we just buy the market, right? We have to trade what we're seeing, which is lower prices. And then we let the market reveal its hand. What does that look like? A displacement. So I'll let you in on some insight. When markets are bullish, they're not kept in discount valuation for very long. So what I was studying was, how do we trade below the sell stops here and the sell stops here in a discount? And it's aggressively repriced away from. So that institutional sponsorship indicated by displacement is what reveals its hand to you that we're likely going to see higher prices. Bullish breaker. Up close, low, lower, low. If we're going to expand higher, which is what I'm suggesting, I'd want to see this act as a bullish breaker. So just like you guys have seen me call inversion fair value gaps before we even get there, doing the same thing here with the bullish breaker. But again, the key is understanding the narrative that we're likely to expand higher. So with that in mind, first target's going to be this high here on the upside. Through that, we have the buy side here, and then if we get animation through that, again, we have these relatively equal highs here that I'll look for as a target. And then again, longer term, equal highs, smooth highs here, buy side liquidity, looking for a date with the 107s per dollar. Hourly chart. I left my day dividers on. Usually I erase those from the previous week, but I want to go ahead and again recap what we saw last week and how that took us into this week. So as you guys know, I gave you guys the high of the day on Monday and all the targets on the downside. But I specifically even told you guys the time it would be delivered. I told you guys what? I like to trade Mondays on non-farm payroll. If I get paid or get what I'm looking for on Monday, I'm done for the week. And then I can entertain potentially coming back on Friday after the non-farm payroll event. And again, those are my exact words. Again, they're there in that YouTube stream. So if you'll recall, what I take your attention to is a downside draw for dollar. Sell side liquidity, right? Equal lows here and here. We were bearish. So if the market's going to drop down into these lows, we have to factor in time, then price. So what does that mean? Well, if we're bearish and we're expecting a drop lower, before that drop, we expect a run in the opposing direction, a protraction in the opposite direction. That's like a Judas swing, right? A fake run. Where did I tell you the run was going to stop and we would turn? This fair value gap. And the reason why that fair value gap is because if you mark out the dealing range from low to high, let me take the quadrants off. This is equilibrium, and this is where we opened on Sunday. So if it's going to sell off here and reach for the discount levels that I told you guys we were going to reprice into, it's going to reach up into a premium first. Why? Because smart money is going to sell above equilibrium. So it reprices into fair value. Fair value for what? Fair value for market makers selling. Prices into the premium. Fair value gap makes the high of the day. When bearish, we expect the high of the day to form at 5 o'clock in London. London, high of the day, it's a characteristic. But again, this only comes together when you understand narrative, right? You have to know the market's likely to reach down into here to know why that should be a turning point. And again, I gave you guys all that last week. Beautiful run. And then again, the real precision is in this right here. Calling the run lower, but then indicating to you guys, once we reach those equal lows, I'm content for the week. yes, there's still more sell side here, and then even greater sell side down here. But what's the characteristic of non-farm payroll? It's likely going to consolidate into that event. So calling the target, saying, I don't need this target to have a profitable week. This is all I'm looking for, is the rundown into here. Beautiful setup, paying the trader on Monday, and then just relaxing through this. And then Friday starts the whole show. So why was I content telling you guys after we reach these targets, I'm neutral, I'm done? This is why. So let me go ahead and get that off. Let's get the day dividers off here, clean this up. All right, so going into this week, let's go up to the 4-hour chart. We have a small, or not a small, but a fair value gap on the 4-hour chart, lower time frame inefficiency on this BISI, buy side imbalance, sell side inefficiency. And we want to see that act as support and see the market expand higher. I would want to see some of this inefficiency left open, and that would indicate to me that the market is exceedingly bullish. So with that, let's go over into the bond market, which is again going to confirm the dollar. Every currency is a unit of debt, so the debt market is again going to be highly influential over each respective currency. All right, monthly chart, market retraced higher, back up into a premium of this range from high to low. Reached the premium, called it lower, used the order block as a target on the downside, and we saw a short-term retracement. I'm still bearish. I'm still favoring underlying bearish order flow on bonds, which is why I'm long-term bullish on dollar. So again, you see how the analysis all marries together and just is beautiful. So looking for lower prices based off what I'm looking at in the underlying order flow and market structure. And again, this is further supported with what we're seeing in US dollar. Weekly chart, been watching this inefficiency here. Wanted to see us stay below it if we're going to remain bearish, as that would again constitute bearish order flow. So I like to see how we traded up into it, but then we ended up closing below it. So this again could be potentially high of the month for a sell-off into the sell side here, here, and then eventually that weekly fair value gap is what I'm going to be looking for going forward. All right, daily chart, market expands higher, took out the buy side here, trading into this range from high to low, trading into a deep premium and trading into this inefficiency here. Like to see how we hit it, and then we got an aggressive displacement to the downside on bonds. And again, if we're going to see continued higher dollar, I'm going to want to see bonds continue to sell off and reach their respective discounts, right? So this inefficiency, sell side here, and then we have the relatively equal lows here. And here's the target for the next week to 2 weeks. And again, as long as we see that, that's going to further confirm higher prices on the US dollar. All right, going over to yields, and we'll make this one short and sweet. Order flow on yields remains bullish, which is bullish for the underlying currency, right? And again, just very straightforward. If the interest rate's higher, you make more yield holding the US dollar, right? So logically, as the yields or interest rates are repricing higher, the currency also gains strength because more people are looking to buy currency and seek that yield. So again, that's where this all ties into. So looking at underlying bullish order flow on the weekly chart, market just took out short-term low. So low here, market trades down to the sell side, and then we displace away. And we see that across all the yields. Daily chart, want to see continued bullish order flow. Market traded lower, took out the sell stop. So sell stops have been purged, and then we aggressively displaced to the upside. So going forward, I want to see continued higher prices on yields, and again, further solidifying the bias that I'm looking for in dollar. So now this is where it gets interesting. Looking at the indices. And you guys know classically when we're looking for higher dollar, we typically look for lower index futures. But this week, gonna have to adapt again to what the market is showing us. Hold on, gotta. Good deal. All right, so monthly chart for Nasdaq. We were looking for higher prices last week based off the monthly chart. I'll even throw some extra sauce in here on the free live stream. Open, we traded lower. This immediate rebalance here on the 3-month chart indicated to me I wanted to see exceedingly strong price action, right? This signature in order flow indicates that the market is extremely bullish because it's doing, as ICT described it, deferring the fair value gap, meaning it's not even allowing a fair value gap to be created, which is an extremely bullish signature. So we trade open, low, immediate rebalance, and this candle's off to the races. So again, additional confirmation and confluence for everything that we called out to you guys last week. Again, just showing you guys what's going into the analysis that's being delivered to you guys week in and week out. Monthly chart, market traded lower. Monthly inefficiency there in gray. Took your attention to how the bodies were supported there. So when we opened this new monthly candle this week for the month of June, we were looking for what? Higher prices. Why? Because the order flows bullish on the 3-month and the monthly. So we want to stay in line with that. So we see open low for the month, which can be made when? In non-farm payroll week, right? Low into what? Down close candle. That's a bullish order block. So open, low, hits the opening price, and then we explode to the upside. So going to expect continued expansion on the monthly chart as long as order flow remains bullish on that daily time frame. You also remember last week, we were looking at the bullish breaker and fair value gap. When those two overlap, powerful, powerful algorithmic signature. So looking at this up close candle, the highest up close, the reason I use this one, and if you remember we looked at this last week, this one has a slightly higher close than this one. So I'm just going to use this candle's range here instead. Extended that through and the fair value gap and told you guys I want to see us remain bullish as long as you remain above this here. So again, open low, making a low of the week inside of the discount and then expanding to the upside. And then for a bonus round here, if you look at the wick, you'll see that we stayed above 50% of this wick, which indicates the market's underlyingly strong because it was unable to even trade down into 50%. And you see the markets last week off to the races. All right, daily chart, we were looking at this SMT here to the upside, indicating, again, we were bullish, which we were. And if you look at this with S&P overlaid, you'll see ES made a lower low here. And that was further confirmation that we were going to be bullish. All right, so we were not looking at this as a breakdown, shift in market structure, sell off to go lower. We were looking for it to trade into the discount, SMT, and reprice higher. Right, so again, it's not just the pattern that you're looking for. That's the secret. Patterns actually aren't really that helpful. But what you do need to understand is top-down analysis and understanding how that plays into time. One sec. I had to get something crossed off my planner here. Almost forgot about that. Had to do that before the stream. All right, daily chart. Again, SMT at the lows, displacement higher. Again, we were looking for higher prices last week. And then I was watching on Friday, the bullish breaker and the daily fair value gap here. Let me go ahead and show you what I'm referring to. So the fair value gap is, again, this inefficiency. And then the bullish breaker that I'm taking your attention to is this up close candle in the range of this low to this lower low. So extending that through, I'm going to watch that going forward. As long as you remain above this fair value gap here, I'm looking for higher prices. If we melt down through it, then that'll indicate to me that we're not as bullish as I thought we were. And then I'll just have to get in line with what the market's showing me. Right now, order flow is exceedingly bullish. Even on the weekly chart, you see this gap left open? Gap left open. So that's another reason why I was relatively bullish last week, or really bullish last week, because of these signatures in the order flow, leaving a gap open, leaving a gap open. That's what we want to see if bullish. So on the daily chart, going to continue looking for higher prices. Again, you guys know my style. I'm not looking to call a top in a bullish market. Like I walked with you guys here. When the top's in, it's going to be in, and we'll be able to be ahead of that. But again, while the order flow remains bullish, I'm not going to try to stand in front of that. So bullish breaker, bullish fair value gap. As long as you remain above that, I'm looking for higher prices. If we melt down through it, I'll reassess, and we'll keep you guys updated with our analysis. So that's what I'm looking at going forward. Love to see how the SMT at the lows held, and just a beautiful repricing last week. All right, 4-hour chart. Let's look again back before we look forward. Make the low of the week inside of a bullish order block here. The body's respecting that. That's algorithmic confirmation. And then from there, we expand into the equal highs buy side liquidity here. So just a nice delivery last week. So now with where we're at in the price action, right, we just took out external range liquidity here. We priced into a premium and now we're consolidating. Keep in mind the economic calendar. Again, not to take the thunder away from our newsletter that will be dropping at 8 p.m. today, not to cover all that here. But two things to be mindful of that will be influential for me going in the next week is the economic calendar. We have no news Monday, no news Tuesday, and then we have CPI and FOMC both on Wednesday. So think of that from a logical, common sense standpoint. Are we likely to see huge, large ranges Monday, Tuesday? Likely not, but again, in the environment we're in right now, man, anything can happen. So, bombs can start dropping, things can start happening, and the markets can just go nuts. So don't hold me to that, especially in this climate here. But based off what I'm seeing in the economic calendar, no news Monday, no news Tuesday, all in anticipation for Wednesday. So my heavy-handed trading is going to be Wednesday or using Wednesday for intel. And then Thursday, Friday, I'll be looking to do my business once likely the higher low of the week is priced in. Why is that? Well, because if there's no news Monday or Tuesday, that's likely going to be used to consolidate or accumulate. High impact news on Wednesday, that's likely going to be the manipulation. That's going to come by way of time. And then I want to see distribution Thursday and Friday, and I want to trade distribution. And again, that's mentorship level stuff, but not holding anything back here for our YouTube community. So that's what I'm going to be looking at next week. But again, that'll be covered in much more greater detail in our newsletter for you guys. So again, with that in mind and where we're at in the price action, we just took out buy side. We're consolidating. I'm going to be patient Monday going into Tuesday. We're in a range. It's uncertain. We're at all-time highs. I'm going to want to see what the market does and just let it reveal its hand to me. Not terribly interested in pushing Monday, Tuesday. I'm going to take a 3-day weekend, take it easy on Monday. And I say that jokingly because when you run a business, you never really get time off. But I'll be taking it easy, at least on the trading side on Monday. And then I'll look Tuesday potentially to do some business in the crude oil market. And then again, I'll be looking back to Nasdaq and S&P Wednesday, Thursday, and Friday. So that's my game plan for the week, what I'll be looking at. And again, I'll share that with you guys as we go throughout the week. So moving forward, I'm going to want to see, again, how we trade at these highs. Still looking for higher price action. And again, using these daily key levels to key off of going forward. That's it. Not going to go into S&P today. Same things on Nasdaq and S&P, looking at the same relevant factors. And the market structure, PD arrays are all going to be relatively the same there. So with that, that's all I had to cover here. Making good time. What are we at? Oh, 4:30. Nice. All right, so let's take a few questions, and then I'll go ahead and get going here. Like I said, I got some matters to attend to here this afternoon. Justice, good evening from Zimbabwe. Nice. Shout out to Zimbabwe. Cody Rich, does it really matter what DXY broker I use for analysis? Excellent question, Cody. So looking at Mr. Rich, yes, sir. Let's go back to dollar. All right. So if we look at the TVC feed, and I've had it with the TVC feed. I'm not liking them much anymore. I've had a couple problems with them earlier in the year, and the tomfoolery on this week just was a nail in the coffin for me. So the feed that I'm using now, I'll use the ICUS. That's a futures contract. It's delayed by 10 minutes. It's usually not delayed. I guess I have to up my subscription there, but obviously I don't use delayed data to trade with. That'd be pretty hard to do. But I'm using the futures contract, or you can use Capital Com. Which one was that? Capital Com. So what you'll see is Capital Com spiked below the sell side here and here. The futures contract spiked below the sell side here and here. But the TVC contract did not take out those lows. That is extremely influential in someone's analysis, especially traders like us who look for this liquidity, right? So again, that's why, in my opinion, the futures market is just night and day compared to Forex. You know, in my opinion, you know, the futures market is the real professional market and where it's at. Because of just look at all the funny business that happens on the Forex side of things. In my opinion, I use it for analysis, of course, but that's why the Forex side of things, futures is where it's at, in my opinion, but still helpful. So absolutely, the broker you use will be influential, and it can be as influential as something like this. So what I'll do is refer to different ones typically, unless you find a good one that's showing that. But when I was looking at my analysis on Friday, and then I was looking at Euro, and then I saw, well, shit, Euro took out its buy side. So that was significant. And then I saw dollar did not. So I looked at it, referred to it, and immediately switched the contract to the one that was reflecting what it is that I was looking for. So key factor there. And now that I'm here, that actually reminds me, currency traders, something important to keep in mind. I'm actually glad you brought that up. Mr. Rich, hopefully that answers your question there, Cody, with regard to the DXY broker. Let's look at pound, GBP, USD. All right, so key divergence here at the highs. So here, Euro did not make a higher high, whereas dollar did make a higher high. And then after, we saw pound make a higher high. So that's an SMT divergence when we were looking for that reversal, right? So if you want to find high probability reversals in foreign currency, you have to understand the dollar. So with everything I mapped out in dollar, right, that it was dropping, likely to sell to buy, dropping to reprice higher, and then you factor in a correlated market that's diverging at the highs when we're already looking for that, that is just the ultimate slam dunk confirmation that we're likely going to see a high probability market reversal. So keep that in mind there. And then if you want another layer of analysis for the currency traders, you can go to Euro Pound. Euro's first in the name, and it's weak. So that's going to tell you which asset you want to be trading over the Euro market or the pound market. So that's the insight for the Forex traders. And again, if we see continued strength on dollar and bonds, then that's going to confirm lower prices on all your foreign currency. Lael, my outlook on DXY last week actually happened on last day, if you remember. Now I'm with you. Yes, yeah, you were looking for the higher prices. Absolutely. And you know, that's a great point, right? Every week, every day, bulls make money, bears make money, right? In my community, day in and day out, there's people that make money going long, there's people that make money going short. So the most important thing is not, you know, who's right, it's are you making money, right? So if you're making money, man, that's awesome. And the great thing about it is there's room for bulls to make money and there's room for bears to make money. It's just about knowing your models and knowing your strategy in and out. So with that, glad to see the community getting the analysis. Love to see it. Inner Circle Treasure, Pure Sauce. Appreciate you. Appreciate you. Anita, hit that like button. Please do. Thank you very much. And can you check gold, please? Absolutely. Yeah, let's take a look at gold. So for gold, you want to also factor in what I was looking at on dollar. That's going to be influential. And you see dollar was ripping on Friday, and that smacked gold down pretty hard on Friday as well. So important to monitor currencies for gold traders as well. So let's go to forex.com feed. Let's go up to the monthly chart. Yeah, so looking at gold monthly chart, this wick here, going to measure that. So this is all off the cuff, not haven't looked at gold already. Yeah, look at that delivery. Boom. Love that. So we have a wick. Again, wicks are gaps. So I like to see how we open traded higher, and then we were unable to do what? Get above the wick. That's an algorithmic signature. So when we see that coupled with strength in dollar, right? So why is dollar so influential? Because right away, dollar's bullish. So that gives us what? Risk off, meaning money's going into currency. So it's going to be doing what? Coming out of commodities. So if we see strength in dollar, that already sets the tone for what we want to see in a market like gold. So with that strength in dollar, we expect weakness to come into the gold market. So then we want to look to confirm that with all the tools that we use in our technical analysis, things that we've learned in mentorship and that have been taught, you know, again, throughout the curriculum in the Discord. So understanding that dollar stronger. So we want to look for sell models in gold. And then when you see confirmations like this, well, then it just makes it a slam dunk. So wick unable to get up to 50% against the monthly chart. So again, I always do top-down analysis. That's one of my secrets. Monthly fair value gap, that'll be a draw on liquidity to the downside. And then I want to see how we trade inside this one here. Through that inefficiency, then we have this large inefficiency here just down below it. So those would be my targets on the downside for the monthly chart, as long as we continue to see that strength in dollar. Weekly chart, we have this up close candle. So this high took out this high. So if we're going to be bearish, that's a key intermediate term high. So we open, traded higher, hit this last up close candle. That could be a bearish order block, and then smash lower. So with what I'm looking at here, looking at the weakness, and then now we have relatively equal lows here and here. And then below that, we have the inefficiency here on the weekly chart. So that'll give a nice draw going into this week. Again, confirming that we strengthened dollar. So through that inefficiency here, we have this wick. Well, actually, there's actually a small fair value gap in here. So that could be another downside target as well. Yeah, even a small inefficiency like that, the algorithm will refer to. So the sell side inefficiency, and then this inefficiency here. Through that inefficiency, we'll have the wick here, and then you can split that up into quadrants, just as again as we are trained to look at. And then as we use that as downside targets, we'll monitor how we trade there. And then if we start to accelerate down through that, then we have all these inefficiencies here for a longer term outlook on gold. Daily chart. And again, this is why gold, it can just be a funky market, you know, and when it just goes into these prolonged consolidations, is why I don't prefer to trade or analyze it as much because of these factors. But when it's moving, it's moving. So based off what I'm seeing here, we traded higher, took out the buy stops here. So we bumped that buy side liquidity. So buy stops were taken here, trading into this fair value gap, staying in the lower portion. And then we aggressively sell off for the sell side here and here. So going forward on the daily chart, we have equal lows here and here. So relatively equal lows here and here. That'll be a downside target. So that takes us into the 22.75 as a downside target. And then the weekly inefficiencies that I have here, you can refine those on the daily chart. So again, everything that we've gone over in the training. So because those weekly inefficiencies are so big, we want to be able to refine that to more precise levels. So what I'll do there is take the fair value gap on the daily chart. Now you see this gives us a much more refined target to use for our targeting. So on the downside, we have the liquidity and the inefficiency. If we get animated through the inefficiencies here, we have these equal lows, and want to see the market trade down into those if we continue to see speed on the downside. I do like to see how this fair value gap was left open, because if we are going to see a nice run to the downside longer term on gold, which could very well happen based off what we're seeing in the dollar, I want to see that gap left open. That'd be a breakaway gap in my analysis. So that's what I'm looking at for gold. What would invalidate that bias are these two up close candles, or you can just look at the down close breaker here. So you can look at the breaker, extend that through. We should remain above that. If we get above the breaker on a closing basis, then that invalidates the bearish bias, and then I'm neutral on gold. So that's what I'm looking at for the gold market. Benjamin, both DXY and Q having bullish order flow seems a bit confusing. It is, Benjamin. We are in confusing times, brother. So right now we are in an election year. So that's another thing to keep in mind. As I was saying, in the U.S. markets, elections are significant. the way I want to be careful I say this. One of the ways the people that provide information through the news, through politics, and that whole game there, the way that works is the stock market is used to portray the economy. So as long as your average person in the United States sees that stock market going higher, they believe that, wow, the economy must be doing really good as well. And it's an unfortunate perspective, because nothing could be further from the truth, actually. The reason why the stock market's repriced so high is because of artificially suppressed interest rates, which forces risk on. So it forces money into the stock market because they artificially suppress the interest rates. So in understanding all that, these types of years can be more manipulated than traditional years. So this year has not been easy in terms of trading. Can you be profitable? Can you make money? Absolutely. But it has not been easy. So I say that to say I'm a bit more flexible in my analysis this year, especially considering those factors there. So it can still move in tandem, right? We could see a reversal in index futures. But because it's an election year, they use that to manipulate sentiment to get people to see, oh, rah, 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 stock market's going higher. World must be doing great. And they sell that. So especially going into election years, they tend to be exceedingly bullish for those reasons. So we can see dollar and indices trade together short term. Eventually, that strengthened dollar will weigh on currency and force, or not currency, on index futures and force them to bend the knee. But for right now, I'm trading the order flow I'm seeing. And then once that comes back into alignment, again, I'll keep you guys updated when it is that I'm looking at that. But great question, Benjamin. Hey, Frank. Thank you, sir. You have a nice evening as well, my man. I was tracking, hey, Dylan, DYLAN next time. Can you look at CL? Absolutely. Would love to. Let's take a look at crude oil. Yeah, I told you guys I'd be trading it on Tuesday, and I didn't even look at it for you guys. Appreciate the reminder. So looking at last week, and we absolutely nailed crude oil to the wall last week. So we were looking at this inefficiency here on the weekly chart, and we were seeing that the market wasn't able to unable to get above it, right? So I told you guys that's bearish. That's indicating bearish order flow or lower prices. So from there, we were looking for lower expansion last week, and that was absolutely money. Calling crude oil from the 77s down into the 72s, $5 move on crude oil. Just lovely. And again, just understanding the underlying order flow and market structure. Daily chart. The reason why we were bearish, we have sell side here and sell side there. So what's those? Relatively equal lows. The market's drawn to those lows because there's retail traders, again, that see the market like this. Oh, look, it's hit it once, twice, 3 times. Man, now we're really bullish because it's really strong support now. It's hit it 4 times. So it has to rally from here. As it's rallying, smart money's selling into that. And then they're covering their position down here to all the losing traders that believe in the fallacy of support and resistance. So that's how we were able to call it. So with that in mind, we delivered all those objectives to the downside. What's interesting to note is how we traded lower, right? This market looks bearish to me. Gaps left open up here. Inefficiency likely going to be left open here. So what I'll be looking at on crude oil is as long as we remain below this bearish breaker, higher high, this last down close, as long as we remain below that breaker, I'm looking for lower prices on crude. If we get above that, then we're likely bullish again. But as long as we remain below this breaker, I'll be looking for sell side. We have equal lows here and equal lows here. So if you guys have been with us for any length of time, you know the drill, right? So looking for continued downside as long as the order flow remains bearish on the daily chart. And then we have all these sell side targets here. And if we get animated through those, we have all the sell side here as well. So that is the business on crude oil. I'll just use the DXY contract, DXY chart. Yeah. Nathaniel, first time watching. Welcome in, Nathaniel. We're glad to have you. Welcome to the winner circle. Inner circle treasure. These brokers, man. I have just discovered that discrepancy, and funny how it's not the first time. Yeah, it's not. These forex brokers, they're up to a lot of funny business. They're up to a lot of funny business, which is why, again, in my opinion, futures is just such a more professional market. Why someone would choose forex over futures is hard for me to understand, but that's my 2 cents. Eric, hey Dylan, are you just looking to trade the potential bias of bullish indices and higher prices if PD arrays are expected, regardless of bullish DXY? Think we can expect short-term decoupling? Yeah, absolutely, Eric. We can definitely see dollar trade higher and indices do so in the short term. Intermediate to long term, indices will eventually bend the knee to the stronger dollar. But for right now, I'm trading the underlying order flow, and I can be okay with the short-term decoupling in those asset classes. Yeah, so it's going to be monitoring that going forward as well. Great question, Eric. Fabrigus, use the futures contract for gold. Yeah, you can. The Forex.com feed gets the job done for me. Just all about what works for you. Adrian, my man, typical support and resistance is a beautiful thing to capitalize on. Oh man, isn't it? And the reason I'm smiling is because that's where my limit orders sit for my take profits. Boom, right into the equal highs, right into the equal lows. And it's a beautiful sight to see, right? Because week in and week out, market's doing the same thing. So it's definitely good to be in the know. Good to hear from you, Adrian. Chris, do you trade a day before or a day after elections, or do you sit back? Yeah, so days before, day after elections, I'm sitting back. A lot of manual intervention, a lot of manipulation, and I'm just not terribly interested in it. If you go back and look at other elections years, the market gets wild. And for those that are not in the community, I'll go ahead and state it here explicitly. I'm only looking for trades that I can define the risk, right? If I can't define the risk, it's not a good trade, right? So sometimes we'll see CPI shoots off 300 points, or FOMC will be a 500-point run, or earnings will come out and Nasdaq will explode 400 on NVIDIA earnings, right? Are those tradable? Can people make money? Absolutely. But what I'm always keeping in mind, and this will you guys will transition into this over time as you become more professional traders and you start managing more money. You're going to start focusing on the risk side of the equation more than what you can make, because professionals stay in the game. And the way you stay in the game is by focusing on the risk. So while yes, there may be opportunity on the election year, there may be opportunity on the next CPI, but I'm not going to enter ahead of it because I can't define the risk. So if I can't define risk, it's gambling. And gambling typically doesn't lead to successful businesses. So that's how I take that. That's my mindset around it. I'm looking for the steady Eddie approach. Silver bullets, easy setups, easy money, same thing every single week, and it doesn't change. So that's what I'm doing with my trading. It's actually relatively straightforward, and it's boring. Pays me every week, pays me every month, and doing the same old things day in and day out. Denisha, glad to see you. Have a great week 18. You as well, Denisha. Eric, sorry for making you answer again. You got me covered answering Benjamin. Appreciate you, brother. Absolutely, Eric. May the winner's circle? No doubt. No doubt. Chris, thank you for your answer. Pleasure's all mine, sir. All right, guys. Looks like I got to all the questions. So 450. All right, guys, I will be getting going here. I don't see any more questions. All right, hope this one was insightful to you guys. That's what I'm looking for going into this week. As usual, we will update you guys throughout the week as we see fit. So with that, guys, that'll be it from me. Have a great rest of your evening. Good luck and good trading. Speak with you guys on the next one.